I'm Ed Orcutt, representative from the 20th, the ranking member on the House Finance Committee. And I'm sure some of you know that the House Finance Committee heard testimony on the capital gains income tax yesterday, Senate Bill 5096. Very interesting testimony. We heard some people testifying of all the services that they wanted as a result of passing it. But as you have seen, as you've heard already, we're seeing our revenues coming back and doing quite well. In fact, we just got a collections update yesterday. The collections update showed that we're up by about another 173 million above what we were expecting when we did the forecast in November. Since the November forecast, we've seen revenue collections come in over $760 million above expectations. I want to say that again, $760 million above expectations. So our tax system is doing quite well at raising money. I agree with my colleagues who've spoken that it's unnecessary. I think I've just helped illustrate that. I think that the revenue forecast comes out tomorrow. When you factor in the positive collections that we've had since November, I think we're going to see that our forecasts are going to be up considerably. It's unpopular. I'm hearing from a lot of constituents saying, do not do this. Some say, I won't even be affected by this, but I don't want to see you do this. The state doesn't need more money. The state needs to be smarter in how it spends. And there's also a contingent that are saying we're concerned that this is going to lead to an income tax and it's going to eventually be applied to everyone. And I think that brings us to the unconstitutional aspect of it. But the other thing that I think is very important is you hear all these people talking about we want all these services to be funded, but they want a stable funding source. They don't want to see revenues go up and down and up and down like a yo-yo, which is what they tend to do when you have something as unstable as a capital gains income tax or an income tax. And that makes budgeting extremely difficult. So there are a whole lot of reasons why we shouldn't be doing it. We've still got a number of employers that are struggling out there, a number of individuals that are struggling out there. Taxing money out of the economy right now is the absolute wrong thing to be doing. We want people who have money to be investing in our economy and their own businesses and not have it taxed away from them. So, I think it's getting ahead of itself also because we have the tax structure work group that just started its work last year and is not scheduled to put a report out until 2022. So nearly 2 more years before we get conclusions from that to know whether this would be a good substitute for anything in our tax system, or is this just going to be added on? So right now is not the right time for a number of reasons to be adding any new taxes, especially one that's this unstable.